Right, good evening, ladies and gentlemen. Let's get our session started. This is Portfolio Live on Fridays for $2,000 cash flow with I'm Possible Terence. If you can hear me right now, can you just drop a note, say hi or hello in the comment section of this Facebook Live so I know you can hear my mic, right? Because somehow my original mic is not working today, so I'm actually making use of a earpiece mic. So if you can hear my voice, if you can, it's loud and clear. All right, great. Thank you very much. Hi, Mei Ling. Hi, Susan. And hi, Eileen. All right, now, Andy, just to kickstart things over here. All right, now, what a comment. All right, now, what do I mean by what a comment? All right, you know the markets are going to go up. You know the markets are going to go down. All right, and if you leave a comment like that, all right, now, I hope it's not a repercussion of how your portfolio looks, right, or how, the stress level of what you're feeling about your portfolio. Because if that's the case, that means you have not done your portfolio management right now. So the way we go about building this portfolio, right, is making sure that we can afford everything that we're trading, right? So if you can afford everything that you're trading, and we are only trading some of the best companies that are available in the markets, right, when they are really cheap, right, it also means, right, that you should not be in a worried condition, right? So yes, we may not be churning more cash flow than we would have liked. Sorry, we may not be churning more cash flow than we would like right now. Okay, but it doesn't mean that our portfolio is in a drastic state, right? So if you have a portfolio right now in a very drastic state, right, that means, all right, you probably didn't plan it well, right, or you have over leveraged yourself. All right, now, so if you're joining us for the first time over here, do look at the banners on the screen, all right, because I will need you to go to this website called streamyard.com/Facebook, right? This is the software that we're using for our live stream, right? And then when you get there, you will see a Facebook button, right? I'll actually need you to click, sorry, click on the Facebook button over here. So you actually approve your Facebook profile for the use of this software so that when you leave comments during the Facebook live session, I will actually be able to see, right, who's leaving those comments. All right, now, so just like this over here, all right, Chen Leong, thank you very much for leaving a comment, all right, and hello as well. All right, now, so thank you very much, and for the rest, please do so as well. Right now, so in theoretical terms, all right, let me tell you the conditions of today's session. All right, I had a very, very busy day. I was out and moving the whole day today. All right, but at the back of my head, I had this in mind. All right, if I cancel today's session, right? Many of you, right? I know this is going to happen, whether you like to admit it or not. Many of you are just going to say, oh, Terence, the market is bad. All right. So you're not running a live session. Are you hiding away? All right. No, I'm not hiding away. All right. Markets are bad, but my portfolio is already well positioned. All right. As you see on the screen right now, I've already hit the cash flow target for this month. All right. And if the market doesn't allow me to do anything, all right, then there's nothing I need to do. Yeah. All right. What do you really want me to do now? Right? Do you want to squeeze something out? Yeah, right. So, sometimes in the markets, right, it forces you to be patient, right? And if it forces you to be patient, that's exactly what you need to do, right? It doesn't mean, right, that you're not working, but by being patient, right, it actually means, right, you're doing the right thing, right? Let me give you an example right now. Okay, if you've seen some of the portfolio stocks that we're trading right now, if you look at WBA, right, it actually just hit a new 52-week low this week. If you look at Intel, it's also trading somewhere near the lows this week. If you look at AT&T, it also hit the lows or the 52-week lows this week. All right, but I want to say this to you, right? If you hold on to a really, really good company, all right, in your common sense logic, is it ever, right? Is it ever the best time to cut your positions in any good stocks when they are trading right at their bottom? Right now, if you actually think that this is a good idea, right, then I need to remind you and refresh your memory, right? If you ever make such a decision, I promise you this, 6 months down the road, right, when you look back at things, right, you're going to regret this decision. Yeah, right. Why? Because you're cutting a good position of a still profitable company in still good shape over here, right at the bottom of their prices. Right? It's never a good is never a good, decision making process. All right. Even if I'm gonna cut any positions, I would rather wait for a bounce, right, to allow me to do so. Right? Why? Because the market is gonna bounce. It's not gonna go back to a new high. Forget about that. It's gone. Yeah, all right. If you still read headlines out there telling you, oh, we're going to make a new high before the end of the year, you're daydreaming. All right. I tell you honestly, you're daydreaming. Why? We are forming lower highs right now. right? And you have interest rate hike environment. You have the UK economy that just blew themselves up. All right. Okay. The next one that's going to happen over here is going to ripple around the world. Yeah. Okay. So you think you're still going to hit a new market high? Right. Think very hard again with 3 months left. Yeah. Okay. Right now. Okay. You just need to play the all defensive mode, right? And make sure you are not over leveraged on your accounts, right? I've said this time and time and time and time, countless of time again. I don't really want to nag anymore because today, right, to be honest, I'm really tired. Yeah, okay, I don't want to nag too much because these are all things that are said and done, right? You should not be portfolio heavy, all right, before this entire correction. If you are, then you have done something wrong, right? You should be portfolio well positioned. You can be well positioned just like me, all right. The worst thing that can happen is you're stuck, right? Then you play a wait and see game. That's it. Yeah. All right. Thank you very much, Susan. All right. So Susan is here right now and supporting my comments. All right. That patience is really a golden element for investment. Yeah. All right. Now, so Andy, all right. I've also said this over and over again to you. All right. Right now, at this moment, averaging down on some of the stock positions that you have may be a good thing. It may be a bad thing. Why? All right. If your position on a particular stock is already at, right, the size in which a portfolio balance should be achieved, I'd rather you, right, take on new positions on other good, right, undervalued stocks than to overweight and then to overload, right, the same stock position. Why? Because it's about portfolio diversification, right? For example, I give you a simple example. If you have allocated that you are not going to expose more than 10% of your account capital in any one company, all right, and you have already positioned 10% of this capital into Intel, right? And you say average down, right? And you decided I'm going to put another 5%. That means you're not portfolio weighted, right? Why? Because 15% of your account is actually going into Intel, right? I'm not saying Intel will go much lower, right? Don't get me wrong. But what I'm saying is Intel may not be bouncing as fast, right? So if it doesn't bounce as fast, it just stays there. All right, then your portfolio is still going to be impacted, all right, as compared to you diversifying 10% into 10 stocks, right? So I hope you see my point over here, right? My job over here is not just to, how do I say this? My job here is not just to bring things over, right? But to also highlight, any potential mistakes I can pick up, right? And bring it to your attention, of course. All right, now, so Andy is, of course, fast and furious over here, all right? So he's talking curve, inflation rate has already came down, Fed has raised interest rates too much. Wait and see. I tell you, Andy, you have totally forgotten how high interest rate must rise, right, before the economy, right, can actually come down, right? And you're forgetting way too much things over here. Yeah, okay. If you think you're smarter than the market, right, the market can wipe you out. Yeah, why? Simple terms. The market has so much more money than any of us, one person, have in our own accounts, right? And that is one stern message I need to give to you, right? Never ever think you're smarter than the markets, right? Why do I say this? Simple. I just give you a fact in your face right now, right? He did say he will not stop until inflation comes back to 2%. Where are we? You said we're slowing down, yes, but no matter how you slow down, we're coming from 9% to 6%. Is there anywhere near 2%? No, it's not. Euro just reported a 10% inflation rate. So if Euro side is not coming down, you think the American is going to stop rising interest rates? Right? Are you dreaming, Andy? Right? As much as I'm offending you right now, I'm telling you, are you dreaming? Right? Why? Because this is my job. Right? My job as a mentor, even in a public free session like this on Friday, is not to make you like me. All right? It's not to make you like me, right? But it's to help you protect your money. Yeah. All right. So I really hope I get the message across. Right. Why? Because in these kind of free sessions, right, many people would like to do the, how do I say this? Play the game, right? Make you like me. All right. Okay, come. No, I'm not interested in selling you anything right now. Why? Because if you know what I stand for, if you know what I'm trying to achieve, all right, then please come on board because there are a lot of things I can teach you and help you. Right. Okay. But if my direct style of approach is not what you like, then please don't come, right? Because I will only teach you and I will only tell you what I know, right? I'm not a one-sided creature. I will not just keep telling you good things. The market is in terrible shape. I will tell you that it's in terrible shape. All right. Why do you think the market keeps falling right now? Because the fund managers are dumping. All right. What day is it today? Today is the last day of the quarter. All right. Do you think they're going to stop dumping right now and leave their portfolio with bad stocks this quarter to show to their clients in their reports, showing that their portfolio is down very heavy this quarter? No, right? Yes, they lost a lot of money this quarter. I tell you, at the end of this quarter, many of these fund managers may even lose their job. Why? Because of how behind the curve they are. If you want to talk about behind the curve, it's the fund managers that are behind the curve, not the Fed. The Fed behind the curve is already known for a long fact, right? And they're still behind. Yeah, all right, they're still behind, not in the way you say it, Andy, right? But in the way that they need to keep rising interest rates, right? And they know that. That's why they're rising it so furiously right now. Yeah, okay, they are. And if you've forgotten, right, interest rate has gone as high as 6% before it stops. I'm not saying we're getting there, but where are we now? Right, we're around about 3%. Yeah, okay, it should get to around 4%. Right, that's my aim over here, 4% before we see some slowing down. All right, so there's at least another one more round or possibly two, right, before you see the Fed, right, coming with a more composed term over here, right? And you have to remember this: when the market has no certainty at all, the market will not stop selling. And Powell didn't give the market certainty. He didn't set an aim of where his interest rate target was. He didn't. He just said, I'm going to open the hose, I'm going to keep rising interest rates until I see the economy slows down. When is that? Nobody knows, right? And that's why you see the market finally adopting the sell first thing later. Yeah. Okay. All right. Now, so with all that said over here, all right, I may have offended some of you, but that's unfortunate truth, right? That I need to bring to your attention. Right. So let's quickly get to the markets over here. I'll do a quick market update. How do I see the markets? And then we'll go to the portfolio. Okay. All right. Now, so let me bring over the SPY over here. All right. Now, so if you look at the SPY, these are all the support levels that we have drawn over here. Right. And what did I say? I said over here, if the support level breaks, right, and this resistance fail, right, it's going to fall badly, right? And when I say it fall badly, I did say we can reach 3006. And where are we right now? We're at 3006, right? And we are not done. Why do I say we are not done? Right? The market is, right, in a very precarious situation. Why do I say it's in a very precarious, right, precarious situation? Right now, there are good things. I'll say first, there are good things. Right? Why? Because right now we are finally getting what we call the sideways movement. Right now, when the market was selling down like this, these few days of it, 1, 2, 3, 4, 5, you should not be bargain hunting. Why? Because the market is in a full-on sell mode. Right? Before the market can bounce, right? After falling from the sky. All right, imagine this, right? If all of you, fingers crossed, okay? If all of you crossed the road and you accidentally got hit by a car, in fact, you got slammed by a car, do you think you're just going to stand up and start running again? No, you can't. All right, you're going to get up, you're going to wobble a couple of steps, figure out if you can actually stand and walk again before you think about running. Right, and that's where the market is right now. Right, it needs to figure out, right, if you can stand, right, by having this sideways movements for a couple of days before you actually see a run. Right now, are there conditions for it? I want to tell you there are. Right, so you don't have to be too bad up at this moment. This is not the time to sell any of your good stocks anymore because you're already too late. Right, this is the time to be patient, suck it up, right, and wait for a better time if you want to cut your losses. Why? Because if you look at this as it's moving in a sideways channel, the positive divergence, all right, on the indicator, this is just one indicator, RSI, is already starting to potentially form, right? If it does form over here, right, it's actually a good thing for the market, right? I'm not saying the market is going to go back and challenge the new high. No, the conditions have totally changed. But I'm saying we can get a bounce, right, at least back to this 3,800 level, right? And if it's strong enough to break, right, this downward channeling resistance, right, we can actually see maybe back to the 4,000. Right, that's my upside for now. Yeah, okay, that's my potential upside for now. Yeah, okay, all right, now, so I do see a rebound. How strong is it going to be? It's anybody's guess, right? It can be back to the top over here, which is 3,800, right? If it's strong enough, right, it can actually go to all the way to 4,000. All right, now, so that's the aim, that's the goal. All right, so whether this is going to play out, nobody knows. Yeah, all right, because like I said, right, the UK just dealt another blow to the entire market. So now the UK has to stabilize before the rest of the markets do. Right, and on another note over here, right, we do have the weeklies. Right, why? Because the longer time frame is actually much stronger than the shorter time frame. Right now, so if you look at the weeklies, you can also see from this low over here to this potentially low over here. All right, the market is in almost the shape to form a new low. You must be clear of that. All right, now, so this can be a double bottom. Right, this can be about double bottom. All right, okay, now if it hits a double bottom and bounce, that's a good thing for the market. Right, and if it does that with this potential divergence, we may see, right, somewhat, rally with strength. Right, so like I said, this is not the time to go selling out, right, any of your losing positions if they're fundamentally sound. Yeah, okay, all right, but this is the time to cut back any short positions that you still have that you're riding on profits. Yeah, okay, you need to shut them out before, if the rebound comes, it might actually be too late for you to take their profits. Yeah, okay, all right, now, so with that said, all right, and with this on the horizon, right, this week, I actually want to do something. All right, yes, I know some of you are going to say, but Terence, you're already over leveraged right now. I don't want to waste time going through all our stocks because all these stock positions are still in the same condition, if not worse than last week. Right? I'll not hide from that. Right? The market has continued to push down. So they are all in the same bad position, right? Or even worse than last week. Right? But having said that, my total capital used, right, is only sitting at 117, right? 117. Right? And right? My account value right now is already at a cash of about $112,000, right? And because, right, if we talk about stocks, if I'm assigned all my stocks, right, that means if I continue to sell put options and I have to buy up all these stocks, right, I actually have a margin facility that goes to a total of $220,000 if they were all stocks, no options, just all stocks, right? So looking at that right now, right, I'm kind of leveraged to an extent, right? I think about 105%. It's nothing drastic, right? About 105%. Let me check if it's correct. Right, this one divided by, no, that's wrong. This 117. No, should be, give me a minute. All right, there we go. Right. So even if I'm assigned on all my positions into stocks right now, I'm about 3% over the leverage, right, based on my cash value. Right. So I can still squeeze a little bit more position in, not too heavy, not too aggressively, right? But because of that potential bounce, I want to squeeze in one more severely undervalued stock today. Right. So I'm going to add to my cash flow, ladies and gentlemen. Right. But this time, right, I want to show you something. I want to teach you something again today. Right? If you have a goal in mind, all right, okay, do what we call making the smart choice. Now, what do I mean when I say making the smart choice? Now, can all of you look at my current portfolio and start leaving some comments in the live session right now? Have I, right, with this month's October expiry positions, already achieved my $2,000 cash flow goal? Have I already achieved that? Just type a yes or no over here. Thank you very much, Ivy. All right, so Ivy comes up first and Ivy says yes. All right, thank you very much, Susan, as well. All right, now this is good. Now, so do I need, all right, is there a need for me to continue to generate even more cash flow for this month? Does it benefit me in any way? Taking on more risk just for the sake of squeezing out more cash flow for this month? Does it benefit me? All right, what say all of you? Tell me your comments. What do you think? Right? Taking on more leverage, right? Just for the sake of pocketing more cash flow for the month of October. Is there any benefit in doing this at all? Right? Try to answer because with your participation, I promise you there's something that I can teach you today. And remember, right? Because this is portfolio cash flow session on Fridays. Right? Everything I teach you here in this session doesn't cost you anything. Right? Because this session is run, kind of like a gift back, right? And with the idea of educating as much as I can, right, on how to develop good skills, right, to actually perform better than the average return, right? Doesn't have to take a lot of time if you look at a Friday session, All right now. So Susan says yes, right? If there's extra cash, all right. Andy says yes, all right, because the valuation is so attractive. All right now. So Tanya says yes too, all right. And I'm a Facebook user. Remember, go to streamyard.com/Facebook, right, and then approve your profile. Okay, right. If you think the market is going up, wrong, 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 and you are all wrong. Why? I've achieved my goal. Why should I take on more risk for the sake of overachieving my goals? Can it come back and hurt me? Yes, it can. So it doesn't benefit me in this kind of difficult environments, right, to do more because I have to take on more risk. So I'm trying to show all of you that there has to be a better reason. If I'm going to add on more risk to my portfolio, there has to be a better reason because my October cash flow has already hit the mark. Why should I go and take on more risk? See now? All right. So the only reason why I want to allocate today is because I want to create cash flow for the next month. Why? Because I've hit this month's goal, but there are great opportunities, like some of you highlighted, right? But that should not be the reason why you should over leverage. No, right? There must be a benefit to you, right? Because in common sense terms, right, if I get you to do something, right, and it involves risk, will you say yes if there's no benefit to you? You won't. That's why there's this big term called what's in it for me, correct? So if I'm going to take on more risk, I will ask the same question. What's in it for me? To create more cash flow for October? No, I've already hit my goals. Why do I need to outperform? No, it's dangerous environments, correct? So the reason is because I potentially see that it's going to be difficult, right, for November cash flow. And you see now, right? For November cash flow, it's difficult potentially. So if I'm going to over leverage, I want to make sure that whatever cash flow I get today is going to help me ink out cash flows for November. Does this make sense, everybody? All right, leave a comment. What do you think about what I just said? Have any of you thought of this before? Was this logic? Was this reason in any of your mind at all? All right, let's be honest. All right, okay, no harm being honest. Okay, all right. Has this ever crossed any of your minds before? If it has, leave a comment. Let me know. I would like to congratulate you because you did pay close attention to how I run my portfolios on Friday with all of you. Right? If I said something like that before, I have. Right? LJ says correct. Thank you very much. Right now, Take Hin says makes sense. Yeah. All right. Okay. Now, no, in my mind. Thank you very much, Tanya, for letting me know that. But now it is. Now it is. Yeah. So you've learned something. Yeah. All right. Ivy, same thing as well. Never thought of it, but now you have. All right. Now, so see, dedicating your time to come here, even on an adjusted, last minute adjusted timeline, right, will always leave you benefiting with some logics. Yeah, all right, now that's what I do over here. Right now, so what I'm going to do today is I'm going to go back to my portfolio, right? And ladies and gentlemen, the stock that I want to trade today, right? Okay, the stock that I want to trade today is eBay. Yes, I'm coming back for eBay, ladies and gentlemen. All right, give me a minute, okay? Just want to launch out the portfolio. I forgot to run that portfolio up. I did say I have a tiring day. Give me a minute. I'll just run the portfolio up. Andy, you must understand one thing. Rolling over, all right, is not the same as creating new cash flows, right, with current new trades. Yeah. All right. Okay. Give me a minute, everybody. Let me just get the official portfolio set up, and then we can get it done. All right, ladies and gentlemen. All right, so looking at this picture over here, all right, can you see what I'm seeing? All right, we have a low over here on the weeklies. We have a low, all right, on eBay, and another low on eBay, which is a lower low, right? But can you see the divergence that is forming? Right, the potential divergence on the longer term chart, right? And I want to show you the weekly, the daily chart as well. All right, okay, we also have the same thing. It's starting to get looking better, right? And on the fundamental side, right, this PE is wrong. Okay, I need to point out that this PE is wrong. All right, now because if you add up the if you add up the earnings per share, all right, let's look at it. Okay, all right, this is $1.99, $1. All right, 105, 105, 90 cents. All right, now so if I just average it out, the last 4 quarters, right, is almost $1 each. Right, so this company makes about $4 a share. Can you see that? Right, $4 a share. Right, and the stock price right now is actually 37. Right, 37.90. Right, so if you calculate PE ratio on a manual calculation, you will take 37.9, right, divided by 4, right, because it's stock price divided by earnings per share, right? So this is actually trading at a 9.4 PE, right? 9.4 PE, right? Now, so some of you will say, but Terence, that's not exactly cheap. I agree, right? But it's already been beaten down. Look, from 81 all the way to 37. It's been beaten down by 60% and more, right? And is the company still profitable? Yes, it is, right? Are the technicals looking better? Yes, it is. What else is for this company, right? Can you all tell me, right? Can you all tell me for the next quarter, right? What quarter is it considered? What time of the year, right, is it considered? Can anybody leave a comment and let me know? Right? What kind of a time of the year are we looking at? Christmas. Thank you very much. Right, Christmas. Oh, sorry. Thank you very Kong thank you very much. I apologize. I wasn't looking at the comments. Right. Yes. So this was what I'm saying over here. Right. Okay. eBay. Right. eBay. Right now. So I was trying to say this, the low and the next low over here. Right. But you actually see a divergence forming on the RSI. Right. And let me just change back to the dailies as I was saying. Right. While the stock is going down, the technicals is actually starting to fix itself. Right. And right. For those of you who are technicians, how often have you seen, right, a blue chip or money making stock actually getting oversold to a 20 RSI? It's actually very, very severe. It doesn't happen very, very often. Right now. So let me develop my my story. Right. So on the weeklies, it looks decent. Right. If you add up the returns, 99 cents, right, 105, 105, and 90 cents. That's where I said average of about $4, all right, in a year. Yes. All right. Christmas season, festival season, right? And for a deals website, right, a bargain hunting deals website like eBay is the best quarter, right, for their business. Is the best quarter for their business. Right? So undervalued company, a stock that's been beaten and trashed down by 60%, right? And yet, if you look at their earnings are not bad at all. They're pretty consistent, right? And now you're heading into their best quarter of the entire year, right? I think I like my odds over here, right? So I'm going after the stock and we're going to create cash flow. And like I said, I won't do it for October because I've already met my goals. So I'm going to split it up over 2 months, all right? And to be conservative over here, all right, I'm also going to play it safer. All right, okay, so I'm going to go after the $35 puts for November. All right, so give me a minute over here. All right, I'm in no mood to bargain hunt with the markets. I just want to get it done. All right, now, so I just got my order done over here, ladies and gentlemen. Let's get it over and with. All right, so I just saw eBay November 18th, $35 puts, right, on the clock, all right, 11:31, which is our current time. All right, okay, and this is the platform time as well. I've adjusted it to Singapore time zone. All right, so 11:31, which is our current time as well. All right, and I just got filled. I sold 3 for 134. Right, I sold 3 for 134 over here. All right, now, so I'm just gonna record this down on our portfolio and let's see how much cash flow we made. All right, now, so let's copy it. Right, so true to how we record our portfolios, all right, this is gonna be trade 35, all right, it's gonna be eBay, all right, 20th November. I hope I got the expiry date right. No, it's 18th of November. 35. We did it today on the 30th of September. All right, and 134. Right now, so this is gonna make me $402 in cash flow, but do not forget, right, that this should be divided by 2. Right? Why? Right? Because I'm gonna net my cash flows, right, over the course of 2 months. Right? One entry for the month of October, right, and one entry for the month of November. So I'm going to split the total cash flow into half. So now, right, for October, I've hit $2,200 in cash flow, right, in what many of you are saying one of the most difficult months for the market, right, and for yourself, but we still hit our targets, right, and I'm off the mark, right, by $200, right, for the month of November. Right, I'm off the mark, ladies and gentlemen. Right, I'm starting the plan. Right, that's what I'm trying to show you. Right, but this trade, okay, this trade is going to add on an additional $7,350, right, in demands, right, on my entire portfolio capital. All right, so looking at everything right now, okay, my exposure is currently at about 125. It's okay. All right, why? Because my cash value is at 111. All right, and now all my trade and positions, assuming very low leverage taken, all right, is at 125. What if I'm assigned, all right, even if I'm assigned all my trade positions today, right, my demand on the portfolio is still below 150, right? How much stocks can I own and afford? I can afford 223, right? And if I'm assigned on all of them, right, and I have the cash requirement, it's 150, right? Do I see all these stocks that I hold at current prices falling by another 20, 30%? No, I don't, right? No, I don't, right? That's why I don't have to worry. And that's why I'm willing to add on a little bit more leverage to my entire portfolio set today. All right, and that's it, ladies and gentlemen. All right, I'm off the mark for November, and that's what I want to do in today's session, and I'm done. All right, I'm done. All right, I do hope you did appreciate the extra effort, right, to also show up, right, when markets are in its most terrible conditions, right, because I have nothing to fear actually, right. In this Friday session, markets are good, bad, ugly, right. The portfolio will still run. The portfolio will still go ahead and try to meet their goals. Will I end up missing out targets for any month? I bet you along the way I would, right. But if falling back to the entire year, I'm still pretty confident that I'm going to hit, right, the year end target, yeah, right, or the 1 year target, yeah, because right now I'm actually over exceeding, right, so I can actually miss out, right, on a couple of months and I'm still in good shape to meet my final year goal, right. But of course, no point arguing, right. Let's see what the markets wants to hand to us, right, and let's see where we are come next Friday, right. I hope you did learn something today, right. If you did, all right, tell me by leaving a comment what was the most valuable thing, right, that you have learned, right, out of my live session together with you today. All right, and of course, do not forget, right, by before I leave the session, if you enjoyed or actually picked up something you have learned, right, do hit the like button, do share it out to your friends over Facebook, right, so we can help more people, protect their capital and also earn better than average market returns for themselves and their money, especially in one of the most difficult times that many of you are seeing. All right, so with that, I'm going to call off today. All right, and I've got more work to do after this as well. All right, I'm tired. All right, but there's more work that needs to complete before I can call it off over here. All right, so goodbye. All right, and I'll see all of you next Friday. Okay. All right, bye bye for now, and enjoy a great weekend. See ya. Good night.